down to this area right here at 737. Come on. Pulling back on me right now. Welcome back to the channel, everyone. Thank you for tuning in to another great video here. We are taking a look here at the ES futures. Not much going on. We are still moving sideways here. But look, we have this area of demand I've been talking about. It's slowly like a turtle trying to approach this zone. All right. So this is on my higher time frame 60 range chart. This is what I do each and every day when I'm trading, is supply and demand. I focus on that. I incorporate the whole concept of supply and demand into a strategy that I use here on my channel, which I talk about basically in almost every video. So if you take the time to watch the videos, I'm not saying you have to watch over 600 some videos, but take the time to watch through a few videos and, you know, take notes. You have to take notes and do your homework if you're watching not only my videos, you know, thank you for coming across and watching these videos, but maybe someone else's channel as well. But look, if you're a futures trader, if you come to the right channel, I really appreciate you tuning in today. I am a supply and demand style trader. And if someone is out there struggling right now, hopefully this video that I put together today kind of reaches you, because I'm going to kind of incorporate discussion and kind of hopefully get into some trades today. Surrounding, if I had to do it all over again and start from scratch, okay, how would I go about learning, or what strategy would I use to trade and starting out again? Okay, if I had to start all over, what strategy would I use? All right, what would I want to know? What would I want to learn? It'll be supply and demand first and foremost. Okay, why? Is because to me, it's all about big movements. It's all about those moves that we see taking place within the market. You know, whether it's aggressive buying to the upside here or aggressive selling to the downside, aggressive selling to the downside. We as retail traders, I say this over and over, we don't make those moves, okay? It is the institutions, and we want to trade like them. If you ever heard the term smart money or smart money concepts, yeah, that's real stuff, all right? But what's going on, you have to understand the logical side to, you know, what's taking place here when you see big moves in the market like that. I mean, there's tons of orders that are being placed, and the market can't really catch up quick enough to fill those orders. So it's moving at a fast pace because there's so many orders that are being pushed in one direction. So the market shoots off up to the upside. Lots of volume steps into the market, and it's either push to the upside or push to the downside. So when we see these type of things take place, as you know, professional or smart traders, or even as a beginner trader, you can train your eyes to catch these type moves and understand the biggest piece of the pie that lies within these moves are the imbalances. So the market has to come back, okay? The institutions are going to gravitate back to those starting points where they started filling those big orders. And the rest is history once the market taps into those zones. Like right here, if it taps into this demand zone right here, we as supply and demand style traders, what do we expect to happen right here? Well, we expect that there'll be some rejection because this is an untested zone, making it a high probability zone, and there are imbalances resting back at the zone. So the market comes back here. We naturally want to think that they're going to try to fill the rest of the remaining orders resting on the table. And as retail traders, you and I, we want to grab their coattails and take the move back to the upside with them. All right, and you have to understand where to go once you're into a trade, or once you start really mapping out, you know, stocking an area. You have to really understand where you can take that trade back up to prior to even the market rejecting that area. So my strategy that I talk about in multiple videos, if you spend some time watching the videos, it's all about chart confluence, using multiple chart confluence, meaning here, in this case here, I have a demand zone here. So I marked it up on my higher time frame. Then I'll move down to a lower time frame to look for a similar setup, meaning I'm looking for a demand setup on the lower time frame once it taps into the higher time frame zone. When we move down to the lower time frame and we start to see rejection, and I'm looking for a demand setup then off the lower time frame, you know, then I'm going to go, in this case here, go long. So it's just having multi-chart confluence, a demand zone on the higher time frame, a demand zone on the lower time frame, or multiple demand areas across multiple charts. It could be a 60 range, 24 range, and a 12 range, which is my entry chart. Maybe you trade, I don't know, you got a demand zone on an hour chart, and then you have it on a 15-minute chart, and you use a 5-minute chart as your entry chart. Those type of things, okay? I don't trade time-based charts. So One thing I do want to say is, please don't ask me what range charts or how they're comparable to time-based charts. I do not know, guys. I don't trade. I never have traded range. I mean, excuse me, not range, but time-based charts. I strictly trade range charts. All right. So that's what I would do if I was starting to have to start over and learn something from scratch. How would I learn, or what would I want to learn to really master in order to scalp the markets the correct way? It would be supply and demand all day long, okay? So not much going on right here in this zone yet, because we haven't tapped into the area. So I'm going to go down to the NASDAQ now, because I look at the ES and I also look at the NASDAQ 100 futures. So if I was looking to scalp this area here, this is a higher time frame demand zone off of the 60 range chart here on the NASDAQ 100 futures. I showed this yesterday. I just want to show this again because I know that people are out there that are looking for a solid strategy to use. But like I said, you must be able to backtest, and you should backtest and do your own research and going back and testing. I'm not just saying for a day or two, a week, a month. Give yourself some time to backtest the markets to make sure that something that you come across and possibly trying to, or in the event of learning or in the process of learning, works for you. I mentioned this yesterday. This was a demand zone because, if you pay close attention to the market, if I was to, kind of zoom out, what we see here is that we originally have a high sitting here and a low sitting out now here. So what are we doing all between here? We're just ranging. We haven't broken a major high. We haven't taken out this major low here. So with all that said, even in the ranging markets, you can still trade supply and demand. You just have to be careful and be able to read market structure very, 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 have a keen eye for it is what I'm trying to say. So if I was scalp trading on the day using supply and demand, again, this is how I would learn it. I would look for key areas of supply or demand off the higher time frame. In this case here, as you can see, the market was moving to the downside, but then we started moving back to the upside here, right? We started breaking structure back to the upside, taking out minor areas of structure back to the upside here, and breaking structure. So I'm looking for, once I start breaking structure back to the upside, I'm just interested in seeing, okay, let me mark off areas of higher time frame demand. So as the market was moving higher here, it was taking out this level here, this area is here. It took out this small level right here, okay, right here at 929. When it did that, what we're looking to do basically is when the market pulls back to a key area of demand, in this case here, we want to see the market start to fill in imbalances. That's the thing. We can see the areas where the imbalances rest within the market. If we take pullbacks to say for instance this demand zone here off the higher time frame, then once I get into the market pulls back to this zone right here, as it did, broke up, pull back, and a breaker structure here. Now that's an essential piece or a recipe to my trader strategy, is having a breaker structure with its demand at. In this case here, just demand on a higher time frame. Again, like I said a couple minutes ago, we're waiting for the market to pull back to the zone. Now it's already taking out areas here. So if I look to the left-hand side of my chart, like I always say, always pay attention to what's going on your left-hand side of your chart as the market is breaking lower or higher, taking out structure. In this case here, we're taking out structure back to the upside. It breaks this above this area or this level right here, and there's imbalances resting right here. All right. So naturally, if you follow the market, it's the course of it, the structure of it, as it's moving higher and it's pulled back to this demand area, it's already broke right here. There's an imbalanced area resting, again, from here to down here, small area. It came up, as you see here, this is as far as it came, and it comes right here. So I'm going to show you this imbalanced area, which I'm talking about right quick. And I need to get over and start looking at some trading, or some areas possibly to take a few trades today. Right here, and then we'll do it right here. Small area in between, there's an imbalance there. There's also an imbalance from the bottom of this candle to the top in this candle here as well. So with that said, again, once the market takes out this area right here, okay, as it did, took out that level right there, it's going to want to fill the rest of the remaining part of that imbalance. But you just don't jump into a trade once it breaks here, okay, or breaks above this level here. You want to wait for the pullback to a key area of demand on the higher time frame, then just scale down to a lower time frame chart and look for a demand setup. I mean, an aggressive area of buying, a setup to where you have an aggressive area of buying. Once the market pulls back to the zone, we're looking for rejection. We're going to go down to that lower time frame, look for a demand setup to do what? To take it higher. First means of effort, or where we're going to take the profit at, is going to be up in this area here to fill in the imbalances resting right here. But also look, because the market is more likely is going to come up here and break this level here, because it's already broke above this through this level here. So it's going to break the high right here and come up and finish filling the rest of this imbalance here. Hopefully that makes sense. So when you see things like this, always start with the higher time frame. You know, when marking off your chart again, whether it's demand or supply, in this case here is demand, and then, you know, pay attention to what's taking place here. Do we have any imbalances to fill back to the upside? Let's say we didn't. Let's say it didn't break this area right here above 929, but it pulled back right here. Where would I be aiming for the market to go, really? You know, where would I be aiming? I'd be aiming for this area, up in this area right here, okay? All right? To fill in this imbalance here and possibly, retest the high right here. Because we'll have resistance sitting out in this area here where it hasn't broke through that area or that level yet. So you have to understand that, you know, you want to take good setups at key areas of high, movements or big movements like this right here. This is aggressive buying on a higher time frame. So we know if this area here is untested, the zone is untested when it gets back there, the probability of the market rejecting that area when it gets there on the higher time frame is going to definitely be high. All right. So we just look down, we move down to our lower time frame and look for a setup at that time. So I went over that kind of that trade breakdown there in yesterday's video. So, and I'll put that video that I created yesterday at the end of this video where you can just click on it, or you can go onto the channel and find it for yourself. But I'm gonna make it as an end cap video at the end of this video so you can click on it and watch what I'm talking about. You know, once the market pulls back to a higher time frame demand or supply zone, in this case it was demand zone, what the steps are, what you need to do, what you need to look for, the breakdown when it comes to the strategy itself when you move down to the lower time frame. It's pretty simple. Again, like I said, we're looking for rejection once it taps to the zone, and then we move down to the lower time frame looking for a demand area, okay? Meaning a breaker structure, a demand created to where the market pulls back to it. We get the rejection with the close of a candle, breaking close of a candle to the upside. We're looking to go long, and I'm looking to fill these imbalances and possibly run up to the upside here. As you can see here, what it did was it moved higher, right? It filled that area of imbalance right here. It started pushing up, all right? And now there's an area of imbalance right here. So the market could have came right here, all right? Rejected this area. Well, you see that bullish candle there. It looks like it is rejecting, right? But be careful, because if you move down to like a lower time frame, you're going to see that you really didn't get a good setup at an area of demand on the lower time frame to do what? To take it going back higher. So all it did was it didn't reject the zone fully, and then what it did was turn and push lower. All right, push lower and test lower areas. So pay close attention. You want to make sure that you're getting the full-on rejection on the lower time frame before you take a trade. In this case here, going long. Had it come here, and then we got the full-on rejection where we get a demand setup on the lower time frame. And then we see when it pulls back to that demand area on the lower time frame that's created, we get the breaking close of the candle in the opposite direction on the lower time frame back at the demand zone on the lower time frame. Then what we want to do is then go long, and we're going to be aiming for, we would aim for it to go from here, okay, got into a trade down here somewhere and taking it all the way back up to here to 950. All right, so but again, watch yesterday's video as I go into more detail about it. But this is what I would do if I was looking to start scalp trading and I had to kind of learn all over again. And this is for anyone out there that's looking for, a great strategy that they can use in their own personal trading. Watch the videos and you will see and understand. It's like so many people who are part of this channel and part of the Discord community. If you want to join the Discord, find the link down in the description. It's free of charge to come over, okay? It's a great community. And there's so many people that trade very, very similar to the way I trade, because they spent time watching the videos, educating themselves, because that's what the videos are there for. I'm not an educator, but I make these videos so that others can watch and, become educated themselves by means of watching the videos. It's up to you. Spend time. You have to put in time to make things work. All right. So you'll find, these type of setups all over the chart, and it doesn't really matter if it's a higher base chart, lower base chart, higher time frame chart, lower time frame chart. Supply and demand is universal. You will see it on a 1 minute, 5 minute, an hour. You'll see it on a 60 range. You'll see it on a 2,000 tick chart, 10,000 tick chart. Volume based charts. It's in a variety. You'll see it on a variety of different charts. That's all I'm trying to say. But it's all on how you use it. What I'm trying to say. The more confluence you have across multiple charts, the higher probability that your setups or the trade is going to work out in your favor. I'll say that. Now let's look over at the charts right quick, because I just want to see if we can possibly get into maybe a trade or two today. Yeah, the ES. I'm waiting for it to come back here, so it's not. not really done much of anything that I personally embedding to take a trade off of, I should say. Let me see here. It broke some area structure to the upside here. Came back. Let's see. Yeah, let me see. So yeah, in this case here, I'll wait for the market to kind of, pull, tap into this demand zone right here, what I'm trying to say. We are kind of breaking back to, to the downside right here. Didn't take out this high, this low yet, we can see a higher time frame, but just kind of making its way back down. So we'll wait on that. I'm going to move down to my NASDAQ chart now. So I'm going to pull that up right quick. NASDAQ. Okay, here we go. Looking at the higher time frame, just want to look at the structure of the market. Yeah, we're bearish, moving to the downside here. You can see it. Low, lower highs, making new lows here to the downside. There's just big swings to the downside. Everything else in between is just smaller areas. So, let's see. So far this morning, it's just, it broke this area, well, let's see. Yeah, pushed down, pulled back, okay. Broke through this area structure, broke this low here at 812. All right, and then ran lower and took out this low right here. So, we took out a major low right here. We pushed down, pulled back, and boom, broke lower. And this was from January the 11th, and now today's the 17th, and it finally broke through this area shortly after the market opened it up. So we broke below this 753 area just a short bit ago. So, and we're breaking structure to the downside. So right now, what is it doing? It's pulling back to this area of resistance right here. Okay, area of resistance sitting right here. And trying to see where did it bounce off of, or where did it reject off of? Was there any key area here on the give me a second. Yeah, this small off the 60 range chart. This area right here, this small area over here was an area of demand right here. Okay, that's why I always say look to your left hand side of your chart. This is from 708 area, demand zone sitting right there. That's from January the 9th. So we can see it tapping. It came down to that area, 708 area right there. And look at it rejecting. So, and I didn't catch this trade, but in looking at it, you could have taken this trade and possibly went along with it. Definitely so. And if you move down to the lower time frame chart. So we can move down to the lower time frame right quick. 10:03. Just want to see what it did. Okay, so right here. Let me see here. Yeah, right. Yeah, right here. You could have went long right here. This was a demand zone to go long at in this area right here. So we can mark this area right here. All right. That was a demand zone. It pushes up, pulls back. You see here, it's moving higher. Takes out, wicks out above here, so took out a small area, this area of structure right here. Pushed up, pulled back, broke higher, broke a structure, pulled back. Demand zone sitting right here, and then it goes up. It goes to the upside. So you could have taken this trade on the pullback right here, and you could have aggressively gotten in. First bullish candle, second bullish candle, closed it at once it closed there, and went long at this hammer candle once it closed. Or you could have waited for the break here at 702 3/4. When I see two bullish candles like this right here, especially two candles that came into the zone, right to the zone, and started wicking away from it, moving away from it, and then we get two closures like that, I'm gonna go long at 700, and I'm gonna aim for here. I'm back on my a higher time frame. I'm gonna aim for up here to fill the imbalance area in between right here around 7, back up to 722. Maybe take most of my contracts off right there. Just showing you an example if I were to trade this, but this is how I trade things each and every day. And then I will look to take, probably stay in a trail with another contract going up. That's the best thing to do in order for you to capitalize, because as you can see here, when the market was pushing down, push down, pull back, it was closing all the areas in this area right here. So the market is going to push higher to fill in and try to fill in the next area of an imbalance back to the upside. Which naturally is going to be, well, you got resistance right here, so be careful. You take it all the way back up to the resistance right here at 755. So you could have got in around 700, 702, and taken it all the way back up if you could have weathered the storm and known how to basically trail behind price, but the market has its moves. So, I talk about in lots of videos, as the market is moving higher, let's say, for instance, we took out right here at, say, 722, which would have been somewhere in this area right here, because it tapped into, it filled in the imbalance on the higher time frame. Okay, so basically what I'll do is at that point there, because we've already pushed up here in the lower time frame and pulled back, I'll put my stop right here. Okay, and then yes, going all the way up to 722, you would say, okay, well, you wouldn't lock in profit because it's such a big area right here. Yeah, you could definitely do so. All right, so but typically what I like to do is I like to, each time it swings up and we're in profit, I like to lock in my stop at the last area of where there's a supporting swing at the back end of it, because the market can come down and test this area of support and possibly want to come lower. So it pushed up, it closed the gap there at 722. It ran the high of that. What am I trying to say here? It ran the high of this swing right here. Okay, broke structure right there at 737 to the upside. Okay, 737, which was up in this area here. So then I'll position my stop right here. But first and foremost, when it came up here and made this high here and pulled back and then broke higher right here, I'll put my stop right here. Okay. Yep. Then you already got stopped out. But look, you would have locked in at 26, 20 or 726, 727 if you had done so. All right. But when it got to this area right here, it's blasted to the upside. So you would have had to have a, you would have definitely had to made a call there, because once it starts breaking structure to the upside, I'm moving my stop. You can move a stop if you trade with hard stops at the back end of the last swing that closed to the upside here. So maybe right here, right? And then as it pushed up, and let's say it pulled back here and it broke higher and have a swing right here, put it right there. So each time it closes and makes a new swing, you can went from here to up here. Then it would have stopped you out right here. All right. So it's just, that's how the market moves. You may not be able to capitalize and stay in that trade the whole time, because you see it pushed up, came all the way back right here. All right. And then it just kind of moves sideways before it went up there and hit 755, 756 area right there. That was resistance right there. So I'm just trying to give you an idea of how I would have taken that trade there. But this was an area of, again, demand resting right here. I'm going to mark this because it was demand on the higher time frame. And, I was making this, I was in the creative mode of making this video at the time. So I didn't catch that, but I would have definitely traded that. I promise you that. So that was the man, right there. I'm going to mark this because I'm going to mark this on all charts right quick. Give me a second. Undo that. Okay. And now we can see where it was on the higher time frame. You see that? All right. And we're still inside the zone. We marked the lower time frame, 12 range demand zone right there. We're within that 60 range zone. So that's what I look for when I trade this stuff. All right, was this right here a demand zone? I'll show you right quick. Broke structure to the upside right here. This right here is an area of demand. It just came back to it. Again, I'm putting this video content in the process of making this video content for you guys, and I missed that trade there. I mean, possibly so. I need to move down to a lower time frame to make sure. But this was a demand zone off the higher time frame. It broke structure to the upside. You can see here, broke right here, pull back, broke structure to the upside here. Demand, aggressive buying. Taps into it. What's it possibly going to aim? Well, at this moment here, more than likely, it's tough to say because we can aim for this area where there's an imbalance resting right here now. I mean, it's tough to say, but it probably will go there. And what did I say? See? But by the time I said it, it went right up into that area, okay? Because it pulled back to this key area of demand. Pulled back to this key area of demand right above. I mean, you got to understand what took place right here. This is a demand zone. So, it rejected that area. Let's go to it on a lower time frame right quick. 1024. Here we are right here. It rejected that area of demand. It's in this area right here. So the market does what? If you really want to see closes of, say for instance, if you can't see the structure in a sense, you have a hard time doing that, go down to like a line chart. You see it, like, push down here, pull back, broke structure right here, comes back, pushes up, pulls back, break structure, takes out this area here, comes back right here, 719, you can do it this way, 719 and a half. Let's go back to the candlesticks. All right. Was that a demand area? Sure, right here, demand area on the 12 range. This was your entry right here to get in. So, the entry was right here at 7, excuse me, not, I'm sorry, at 19 and a half, or that's the demand zone off the lower time frame, what I'm trying to say. The moment it breaks to the upside here, we get a closing above, maybe you got it here at 23 and a half, or what, you know, maybe slightly higher at the actual close. I'm aggressive, so once it starts to tap into this zone right here, I get this bullish candle right here, and then I start to see more bullish activity to the upside volume-wise. I'm going to go ahead and get to the trade being aggressive. If you're more conservative, then wait for the break and close of the candle to the upside to take it going back up, because the higher time frame demand zone, as you can see right here, it's tapped into a major area of demand right here. So it's more likely going to come up here and test this high right here. And because it tapped into this resistance area right here already, there is an imbalance right here. I'm not saying it can't reject this area when it gets back to this area of resistance, because it could. It could have came up here and then folded back down. But still, when we get, if the market taps or comes back down to this demand zone, we can aim at least for the high of this area right here. Not saying it's going to go all the way up here. So like, again, maybe you got in at 20, 19 and a half, or what was it at? Let's say the break and close. Maybe they're at 25 and then took it back up to around the higher of this area on the higher time frame. Okay, all right. So I'm not sure yet if it's actually even done. If you're looking at the higher time frame, it's still a small little area right here, back up to say 64 and a quarter, that the market can run back up to. So I'm looking here to see. Let's see here. Reject it right here. Okay, no. I see what it's doing now. Yeah, it looks like to me maybe trying to go back up there and finish course of going up there to 60. What did I say? 64 and a quarter. 764 and a quarter. Let's see if it's going to go there. But this is also a okay. Got to be careful here, because this is a supply area. This is a supply area, so more than likely it's rejecting off of that supply right now. So I'll take that back. So it did feel an imbalance resting right here, but it's rejecting off of this area of supply right now. So I'm taking a short, and hopefully I can get filled here. Go back to my lower time frame. Took a pullback trade. Looking to get filled here. Hopefully it'll come down here. Looking at my higher time frame to see. This is an area of supply. Ooh, it's going to be tough. Looking for it to come down, and yeah, let's do this, because it could test this area here, because this is a demand area right here. I didn't see that. So looking for it to come down to this area right here at 737. Come on. Pulling back on me right now. Come on. I think I might take out. There we go. I'm going to take out right there. See, it hit almost. It was to the tick almost. One tick away. I went ahead and closed. And that's how fast it pulled back on me. Yep. So that was supply right there. This was demand right here. All right. This was another demand zone on the higher time frame right here. As I mentioned, you had this area right there at around 764, or just say 765 if you want to. Small little areas still need to go up to and fill in. So it came back down there. This was at 1036. Let's look at 1036. The market started pulling back here. Broke structure to the upside. Looking for a demand zone really to get into. You could have got into. It'd been nice to see if it broke here and then came back and tapped right here. But it broke this area right here to the upside. Pushed up, pulled back. Here. Came right here. Maybe at the close and above, if you knew what you were doing, you know, looking at the market and where it's going to go up to. I mean, definitely was going to try to aim for higher areas to finish filling in that imbalance there. So this is a demand zone, okay? That's the demand zone to take a long entry to fill in the remaining portion of that gap back up here to 765 is what I'm trying to say. And you see we're hitting this area. Oh, we just broke it. Broke this area. Broke this level right here to the upside. So we broke. Just got a push up, pull back, break structure, pull back, broke it, another area of structure right here. So be mindful now, if we break above this area right here, all right, the market is going to, let's see here. Well, it's going to test this area right here. There's an imbalance resting right here. There's also an imbalance resting right here. And then we have resistance resting right here. So be careful. But that's going to do it for me today. I posted that trade there over on our Discord community. Like so many of our fellow Discord members post their own trades. And we discuss levels or zones on the Discord as well. You know, it's a good opportunity for us to share ideas with one another. So that's why I say if you're not a Discord member and want to join, find the link down in the description portion of the video. Click on it, invite yourself in. If you're interested in receiving further information, more about the breakdowns of my trades that I take, I don't post trade breakdowns every single day over on the private community, but there are tons of them already. I'm going to try to start posting weekly going forward and doing that. But already on the private side, if you are a elite channel supporter or elite channel member, you have access to or gain access to the trade breakdowns and that video playlist, which is a hand selected list of videos that I've pulled away from, pulled out of off the channel and put link by link. You know, there's a series of videos that I feel are cover the most important information surrounding how I trade and the strategy I do. But you also receive the trade breakdowns where I go in depth and in detail so that you understand why I'm taking these trades, where I'm looking to take profit at, and things of that nature. So if you're interested in becoming an elite channel supporter for it's only $6.99, $6.99 a month. Click on the join button. You'll see it. Click on it. There'll be 2 tiers pop up. Make sure you choose the one that says Elite Channel Supporter. And basically what you're doing is supporting my efforts as a content creator, providing you valuable information that should definitely help you in your own trading, because it's already helped so many other traders out there. And if you don't believe me, okay, you ain't gonna take my word on it, come over to the Discord and ask for yourself, and you will find the answer that you're looking for from other individuals who are an elite channel member, okay, and have gained access to the private videos, and it has helped them out tremendously, okay? So simply click on the join button, or you can find the link down in the description portion of the video, and that's all you got to do. If you right under the Discord link in the description portion, you'll see a link that says Become a Member. Click on that. It'll take you right over to those 2 tiers, and make sure you choose the one that says Elite Channel Supporter. Outside of that, that's all I have for you today. If you're not a subscriber, please take the time to go ahead and subscribe. What are you waiting for? This is probably one of the best future trading channels out there. I provide valuable content and information that most traders don't talk about on their videos. I'm not trying to bash anyone, but I'm just trying to simply show you the way that I actually trade, because I truly want to see people become consistent and profitable. It's just not about me just taking trades. I have over 600 videos, and I'll be going in depth with my stuff because I want people to become profitable and consistent in their own trading. All right, I'm just not showing you how I do it. I want to see everybody else, be able to provide for their family, make a means of living, and work for themselves. You be your own boss and make your own business. Sitting here looking at these charts in the comfort of your home, in a vacation hotel somewhere, in a resort, wherever you want to be and travel to. Okay. Outside of that, make sure to click on the bell, turn on all your post notifications, and last but not least, if you found value in the content today as we covered here, how would I learn, okay, if I had to start over to start scalp trading, what would I do? What strategy would I use? What would I learn? All right, so do yourself a favor and make sure to drop a like on the video. Take care.